Well, it's been an extremely bullish past 15 months for shares in the Western world, and none of those shares have rallied harder than the AI-related stocks. But over the weekend, there was perhaps a bit of a reckoning for these shares. So hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday, the 28th of January, 2025, and before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for yourself. So there was a reckoning, as I mentioned. Out of China, we've got a new, well, not so new, but there is an AI model called DeepSeek, and it basically seems to be extremely competitive with its much more expensive US counterparts. In fact, according to some reports, they've spent only $5.5 million developing these models, and they run on much cheaper Chinese-made Huawei infrastructure. Compare that to the US, where they've spent billions, and indeed, the chip maker Nvidia has received billions in revenues and profits of building very expensive chips for very expensive AI models. So the fact that these Chinese upstarts, if you will, have been able to compete with a fraction of the price has really called many to question the viability of a lot of these US AI tech-driven companies. The other thing it's called into question is whether things are going to be able to be monetized as heavily as expected in the AI world. If people can introduce cheaper models, will some of these, Microsoft, Meta, some of these other companies who are planning to monetize this AI, will they be able to achieve the revenues and profits that have been forecast? That's all up in the air now, whereas previously it was seen as an almost certainty. These stocks have rallied as hard as any stocks ever have. And over the weekend, a lot of that sort of bullish optimism was called into question. So overnight, we saw a big sell down in Nvidia, in other AI-related companies, and there was a multiple percent sell-off in the Nasdaq, and indeed a 1.5% sell-off in the S&P 500 as well. That led to a lot of uncertainty. It led to a lot of technology stuff being sold down, but the Australian market was fairly resilient today despite that. The reason that is we've got an inflation reading tomorrow. Australian inflation is expected to drop. It's expected to keep falling, and it's expected to head back towards the RBA's target rate. So if inflation is falling, what does that mean? Well, it means that the RBA might cut interest rates sometime soon. I'll touch on that in a moment. The inflation rate has actually probably been a bit weaker than expected in Australia for the past few months, and that's allowed our market to hold near its highs. We're within 100 points, or we're about 100 points away from our all-time high, and if this inflation reading comes in lower than expected or even in line with expectations, as long as the US doesn't sell off much, or as long as it doesn't keep selling off, I suspect we'll see some optimism locally. Now, we'll just caveat that by saying that our market is the most expensive it's ever been, and even though a weak inflation reading would be great for us, we are entirely dependent on the US. The reason we've gone to all-time highs, such expensive levels, is not because of our local economic situation, it's not because of our inflation levels, it's not because of our expected path on interest rates, but it's merely a function of US shares continuing to rise. The US government is printing record amounts of money. They've got expected rate cuts in the US as well. And that combination, that huge amounts of liquidity flowing in with money expected to become even cheaper, is pushing US shares and indeed global shares higher. That's the dynamic that has lifted Australian markets, not anything to do locally. But regardless, if we do see some positive economic news tomorrow locally in the form of lower inflation, it should still provide a short-term sugar hit for the local market. And then we move on to rate cuts. So if we do see the lower inflation, or lower than expected inflation, or even inflation falls as expected, it does open the door for a Reserve Bank of Australia rate cut, the first cut of the last few years. If we do see this reading come in as expected, we're going to see a rate cut in February, in about 2 weeks' time. Currently, the market's pricing in a 70% chance of a rate cut at the February meeting. That 70% chance assumes that inflation comes in as expected or lower than expected. And if that's the case, I suspect that percentage chance will start moving towards 100% likelihood. The 30% chance is basically saying that inflation will come in stronger than expected tomorrow. So we will be watching this reading closely. We do think we're going to see some movement on our market after that reading comes out, or as that reading comes out. And like I said, an inline reading or a lower than expected reading almost cements a RBA rate cut when they meet in the middle of February. The other thing to mention on the rate cut perspective, though, is there is also a Federal Reserve, US Federal Reserve meeting this week. The Federal Reserve in the US has already started cutting interest rates. They've been cutting interest rates since September last year, and they've cut it several times over the past few months. However, they are expected to pause at their meeting this week. And the reason for that is, like I said, they've already cut rates quite aggressively, and yet their economic data is remaining fairly resilient, as is their inflation data. So if their inflation data doesn't keep drifting lower, we could see some extended pauses over the coming year. Originally, they were expected to keep cutting quite aggressively this year, but at the moment, the market's only expecting maybe one cut in the next 6 months, or ahead of the half year. So that's also giving their market a bit of sort of pause for thought. Obviously, they rallied quite aggressively last year with the belief of many rate cuts to come, but given the fact they are starting to slow, we could see a little bit more caution from US investors. Indeed, they did see a big sell down in December. Even though there was a rate cut in December, the Federal Reserve said they were going to go a bit slower after that point. So we could see some optimism tomorrow locally, but will we see that optimism continue if the Federal Reserve this week is a little bit more on the hawkish side of things and points towards more of a pause on rate cuts? So like I said, Wednesday day, we're going to see the inflation data, and then Wednesday night, we're going to see the US Federal Reserve meeting. So let's have a quick look at the charts for this week, guys. Just 1 second. And this is the XJO, the top 200 shares on the Australian market. We really sort of drifted off with the Federal Reserve meeting in December, and we hit a low of 8,100 right around Christmas. After that, we have bounced back up. It's been a bit volatile, but notably, we've had higher peaks and troughs, and most recently, we've set a higher peak. We sort of stalled out roughly around 8450, 8400, and we've tracked along the 8400 level for the past 3 sessions. If we do see a positive CPI reading or a lower than expected CPI reading tomorrow, that could give us a bit of ammunition to push back towards 8,500. However, it's likely that we'll need to see strength in the US as sort of, to allow us to move to that level, as a condition of moving to that level. Like I said, we're only up here, we're only in the 8,000s because of US strength. If US does sell down, if they don't continue to rise, regardless of what our inflation looks like, we probably will join them in a bit of a sell-off. If we do drift lower, we've got potential support levels roughly every 50 points. So we've got one around 8,350 and 8,300, and then the longer-term uptrend line for our market comes in around 8,250. So let's have a quick look at the US market for this week. And this is the US S&P 500, their most broad-based share index. It reached its own all-time high late last week. It eclipsed the 6,100 level, which was the previous all-time high, but only just. And then it sold down a little bit on Friday, but it dropped very strongly overnight. It ended up about 1.5% lower, and that was only after a late rally that pushed everything back up quite a lot of its lows. The big drop overnight, as I mentioned, it was driven by AI concerns. Nvidia, one of the largest stocks in the world, second or third largest in the world, lost around $600 billion in value, more than twice the market cap of Coca-Cola in one single session. However, despite that, actually held above the key 6,000 level. And that's probably a little bit of a positive sign as they go into tonight's session. There are still buyers, and that's because there's still plenty of liquidity being pumped into the US market. Technically, they look further bullish. We've got higher peaks and troughs, we've got a longer term uptrend. However, the events of the weekend, the concern around the Chinese AI competitors, and perhaps Wednesday night's more hawkish Federal Reserve could maybe put a bit of a dampener on things in the short term. So what we're watching are the 6,100 level to the upside, and the 6,000 level, roughly where the market is now. If it closes below 6,000, we're starting to look back towards the January lows, and if it's able to hold above 6,000 for the Wednesday night session, I imagine we're starting to look back towards the all-time highs. So I will wrap it up there for this week, guys. There's quite a few, well, a couple of quite important events over the next sort of few days, and that could dramatically change the perception of the market in the minds of investors. So hopefully you guys enjoyed this one. If you did, click like, click subscribe, and we'll see you guys next time.